Let's talk about it with our closing bell exchange today. Jonathan Corpina from Meridian Equity Partners. Michael Yoshikami joins us from Destination Wealth Management. Rick Santelli here, as always, at the CME Group in Chicago. Thanks for joining us, Jonathan. The U.S. equity market under a little bit of pressure today, but nothing like some of the losses we've seen overseas.
Right. I mean, we came in today, and you mentioned doom and gloom before. We saw the headlines. I walked in the building this morning. Futures were down 8, and we rallied back pretty quickly. It seems like that's a normal sentiment we get. Negative headlines come out. The market absorbs it, and we rally back. We did fall off the cliff a little bit here at 11:30 when Europe closed, and we see small continual pressure on the market right now. But it seems like this market has really absorbed this information, and it is the contagion, right? How big can this spread? Where is it going to go from here? I think investors are waiting to see where this pulls to.
Michael, do you think we're getting a sign of what a big currency fall can mean in negative terms for China?
Yeah, I think we are actually, and I think that first of all, I don't think that this kind of thing is likely to occur in China for a lot of reasons, but I think it really does highlight the problems associated with investing in emerging markets without really fully understanding that it's just not about economic growth. It's about dollar strength, the exchange rates. The political concerns. There's just so many different things you have to be aware of with emerging markets. You know, the U.S. markets have been pretty stable despite what's happening. Yes, companies in the U.S. have emerging market exposure, but the U.S. is in some ways very much a safe haven away from EM, and I think you're starting to see flows suggest that that's a perspective embraced by investors.
Rick Santelli, what's the level of angst that you see in the bond market or even in currencies outside of emerging markets, where we know is the source of the pain right now?
You know, we've gone through the emerging market drill many times, even outside of big advertised crisis-type conditions. So I think investors are well aware of all the issues involved, and the fact that a 2-year note and a 10-year note are both basically hovering at 3-week low yields in the States give rise, as our last guest said, there are safe harbor areas to hang out. Investors have done just that. It is a very low level of nervousness, I hear, with the immediacy of contagion or systemic issues. But what I also hear is that the European banks do have the exposure. Our one guest pegged the exposure somewhere between 150 and 180 billion. But the issue is what it does with Mario Draghi and the central bank. You know, at every turn, every crisis that happens from this point forward, part of that is going to be what central banks have done. They've been enablers. They've been enablers of easy money, low interest rates to propagate, whether it's companies that are zombies or in this case economies that are zombies, mismanaged both geopolitically and economically and from a monetary standpoint. And I think how Mario Draghi deals with it, what he includes in his statement regarding how this may slow quantitative tightening down is huge. We all have a runway here to the next global recession, and these central banks need to get their houses in order to have enough insurance to deal with that when it emerges. And I think that's the way I would frame the angst I hear on this trading floor. It's more of a macro picture, a macro picture being the next couple of years.
Jonathan, quick final question. We haven't had you on in a while. What's your general sentiment towards markets as we had this low trading summer? As we come out into September, will we get another kick to the upside?
I think we will. I think we're going to see a pickup in M&A as we get towards the end of the year. I think overall sentiment is going to pick up. Yes, we are in the summer lows, but that's what we see historically. I think overall this market continues to absorb any negative headlines out there and continues to trade towards the high. Thing that concerns me on a short-term basis right now is the VIX. Bouncing off the lows of last week, we've come up about 3-4% in a very short period of time. There is a little bit of fear that's there as the market gets a little lofty.